Welcome to Walker's Market Weekly. I'm RK Walker, bringing you a review of this week's stock market. On Monday, existing home sales for May declined 9.7% to an annualized 3.91 million units, much lower than expected. Over the weekend, a dozen states reported sharp increases in coronavirus cases, and there was a tug-of-war between bulls and bears throughout the day. However, markets ended the day up modestly. Gold was a winner, increasing 0.1% to $1,765 an ounce, its highest level in 7 years, and West Texas Intermediate crude rose 1.8% to close at $40.46 a barrel as commodity prices in general rebounded in anticipation of growing worldwide demand. On Tuesday, the PMI composite flash for June rose 10.4 points to 46.8, and new home sales for May rose 16.5% to an annualized 676,000 units. The Nasdaq composite closed at a record high on the strength of Apple after the company made several announcements at a tech conference. The Trump administration sent some conflicting signals about whether or not the trade deal with China was over. However, President Trump then issued a tweet to say the deal is fully intact. Gold continued gaining, closing at $1,785 an ounce, almost an 8-year high. On Wednesday, the EIA petroleum status report for the week ending June 19th saw crude oil inventory increase 1.4 million barrels. Reality hit markets after several states, including Florida and California, reported dramatic increases in coronavirus infections, and New York, New Jersey, and Connecticut ordered visitors from hotspot states to quarantine for 14 days. The travel sector was hit particularly hard, with major airlines and cruises seeing sharp declines in share values. By market close, the Dow Industrials was down 710 points, and West Texas Intermediate crude lost 5.5% to $38.16 a barrel. On Thursday, durable goods orders for May rose 15.8%, higher than expectations, and the final estimate for the first quarter GDP came in at minus 5%. Jobless claims for the week ending June 20th fell 60,000 to 1.48 million, higher than expectations. Texas and Florida halted the next phase of their economic recovery as new coronavirus cases continue to surge, prompting markets to sell off. However, the Federal Deposit Insurance Corporation reduced the amount of cash reserves that banks must set aside and freed banks to make investments in venture capital funds. The good news created a seesaw effect, with markets ending the day with strong gains. On Friday, consumer sentiment for June fell slightly by 0.8 point to 78.1, and personal income for May fell 4.2%, while consumer spending rose 8.2%. The PCE price index rose 0.1%. Markets opened sharply lower after Texas's governor announced the state will reverse some of its reopening activities as new coronavirus cases threatened to overwhelm its medical system. Banks were also hit hard after the Fed announced limits to banks' dividend payouts in order to ensure minimum capital requirements under potentially severe economic scenarios. Shortly after the open, the Dow Industrials was down over 500 points. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.